Listen-only mode.
Good day, everyone. Well, the markets are doing what they've done since December. That is, they go straight up and straight down, and they don't go straight up or straight down for very long, which makes for quite a whipsaw environment. If you look at the S&P 500, that exemplifies market action as it's been since December quite well. We've got major averages that are under their 50-day moving averages, and we've got others that are like the Nasdaq and that are in the Russell that managed to do well up until the last couple days, and they've all gotten hit quite hard in this environment. I think the market's be running out of steam just because, well, based on the market action, you know, the QE issue has been favorably stated by Yellen, who's a dove, who has reassured markets that basically they're not going to be raising rates. So the markets rallied on that news, and now they're having a second thought, because ultimately, you know, this QE that's been going on since 2009 isn't really doing what it was supposed to do, and that is to turn around global economies after the 2008 fiasco. We see a major world economy still foot dragging. China, who has been the fastest growing nation relative to its prior growth rates, it's also in a quagmire, and this creates a lot of consternation for the U.S. market, because all these markets are tied together ultimately, more so than ever before. So, you know, if you look at the world markets and you look at the European bourses and the UK and etc., you'll see that they've been underperforming for many, many months now. They can't seem to hit new highs. The U.S. market, on the other hand, is the tallest standing midget, so it continues to hit new highs. You know, if you look at a weekly chart of, say, the S&P, then you can see that QE has pushed these markets reluctantly higher, but much more so, the reluctance seems to be increasing since December, where the S&P is almost flatlining on the weekly chart. Whereas when QE3 kicked off at the beginning of 2013, you got more of a steep uptrend. Not a steep uptrend, but let's say the ascent of the S&P was faster than it has been since December. So all that's to say is markets are forward-looking. I think they see that either the Fed is going to have to raise rates at some point, which is not good for markets, or the global economy is not going to recover as it should, and of course that's not good for markets either. And so all these central banks can continue to print, as they've been doing since 2009, and more so today than before, but we're not getting the results. And I think the market's just getting very frustrated and exhausted. At least that's what the price volume action in major indices is telling us. So, you know, with the Fed going data dependent as of their last announcement, you know, we're going to be looking at things like, you know, what's first quarter GDP going to be like? It's probably going to be on the weaker side. That means more QE. That means good. We'll have more money to push markets up higher. But I think the you know, the boy that cried wolf. I think the market's been crying wolf many, many times since 2009. And at some point, I think we reach a break point in terms of what market participants believe the Fed's capable of doing, and what lies ahead in terms of QE or no QE, economic growth or no economic growth. The situation is not pretty, and as Alan Greenspan said about a year ago, or several months ago, we're in uncharted territory, and he said it in a very menacing manner. So all that's to say, I guess, we need to just be, you know, very nimble in our trading. You know, market timing. This is the worst market timing environment you could trace out, because as you can see in the S&P, you know, you've got markets. The market just isn't going anywhere, And every time it looks like it's going to go somewhere, it stops short. Every time it looks like it's going to really drop fast, it finds its floor and then starts to go higher. So definitely it's a stock picker's market, as it has been actually for the last couple of years. And doing as we've dictated over many reports, over many months, going back the last couple of years, it's incredibly important to have your stops tight. And this is a kind of market that really reinforces one's own personal discipline, because you have to be quick. You have to take your profits when they're there, and you have to not argue with selling a stock when it does hit your sell stop. Gil? Gil? Are you there?
Yeah, give me 1 second. Just doing some trades here. Anyways, the Fed this and the Fed that, and the economy this and the economy that. But ultimately, I think, as someone points out here, if we zero in on price volume action and stay nimble and ignore the day-to-day noise of the Fed chatter, we should be okay. That assumes that you're reading the price volume action correctly. So I came in short this market. I thought over the weekend that one should at least take a bifurcated approach, meaning if you're going to go with some long ideas that are working, and we have seen a couple that had some moves, but the moves are fleeting. For example, you got Twitter hopping and bopping along here on a breakout attempt on Tuesday, which was immediately fly swatted back to the top of the base yesterday, and there was even a good nice move in First Solar, which looked like it was headed for a pocket pivot breakout, but didn't trade enough volume for a pocket pivot, I believe. Let me see. Let me check that. Yeah, it missed by 3,000 shares, it looks like. In any case, now it's broken down to the 20. You're seeing the real fun short was hitting this one yesterday, Skyworks. I mean, this has been a stock that is arguably one of the better trending names. You know, it's never violated the 50-day all the way up. And then yesterday it just gets slaughtered. But what do you notice about this? You fail at the $100 price level. So yesterday you fail there, and you're looking at it. And this just to give you an idea of the stuff I watched during the day. I don't assume anything. I look at everything as either potentially a long or a short, depending on the signals that I get. So, for example, yesterday, early in the day, you could see right after the opening, you got a sell signal on the 620. It failed at the 100 level, so you got both of those working on you or on the stock right away. And boom, they smacked the thing, and it's down all day and down $5, and it's down another $5 today. I covered my short this morning into the crush of liquidity right off the open, and I also did that with Netflix right off the opening here. It's rallying. I'm thinking about putting it back out on a bounce. Even had some Amazon short, which was a nice reversal yesterday, but it's not really. It's actually looking like it's headed for the 50-day. And I probably should be working on putting my shorts out right now again instead of doing this webinar, but you'll have to bear with me if I decide I want to place a trade or two. Let's see. I mean, they're smashing everything. If you look at AMBA, for example, that's just getting raked off the peak. I mean, just slammed. And the SOX in general, if you look at the SOX, that's just getting destroyed. You're breaking down, big gap down. And I think the whole issue with the market right here is that economy is slowing down. You had a negative 1.4% durable goods number yesterday. You've got, hold on a second. You've got the Fed soft pedaling on, raising interest rates, and they're completely befuddled. You know, all this BS about Janet Yellen being really smart. You hear Jim Cramer babble about how smart she is, and all this BS about how the Fed is doing such a great job, and they did what was necessary. It's all baloney, because you've been going now for 5 years with near zero interest rates, and there's no economic growth. So hello, wake up everybody. This is nothing but a huge bubble. And it's continued to go higher, but at some point, like Dr. K was saying, this turkey blows up. And when it ends, the distortion in the market that QE has created has to come to fruition in a very bad way. And so, you know, all these goofballs who get on TV and just tell you buy the dip, they've looked smart for a number of years simply because of the bubble that's ensued. And they're probably not going to look smart when this whole thing blows apart, just as they didn't in 2000 or in 2008. But on a practical level, I think you're seeing some things here. You know, I talked about last week you're seeing a fractal head and shoulders in Netflix, and this is coming on the right side of a big pod, punch bowl of death type formation. Let's see if I can pull up my weekly chart here. Here we go. And you've got these two, it's a double D pod as I call it. You know, it's these big cups here. And this one failed, and now this one looks like it's en route to failing. You're sitting at the 40-week line here, sitting at the 200-day line on the daily chart. You can see the fractal head and shoulders forms. You have a gap down through the neckline here, but you're not going to short that. What you're going to do is wait for the rally, and you got the rally on Tuesday, and it was a perfect short right at the 20-day moving average. Bingo. It was right there, and even yesterday morning you can see that the 20 days crossed below the 50-day, and it's heading down, and I wouldn't be surprised to see this thing head lower from here if the market continues lower. So if you guys have any questions about any short ideas or anything else, feel free to type them in. I don't really see anybody alive this morning. Maybe it's too early. My feeling in general is it's kind of early in the day. After covering my shorts pretty much off the opening, in some cases even before the opening, I think it was more a matter of letting this thing kind of settle out, because if you look at where the indexes are, Nasdaq's just under the 50-day, it's on top of this structure, so you're getting into a position where you could see a bounce. And so being cognizant of that and making some pretty decent money yesterday, I was also long the UVXY, which worked out pretty well. And you have the S&P approaching this low, and it's getting down into this area of congestion. So it wouldn't surprise me to see this thing bounce. So, you know, when the market gives you a nice break on the downside when you're short and you get a gap down in the morning, I think you take some of that at least. I'm noticing Amazon continuing lower. Some other shorts. Yahoo has been a real dog. That was another one I was short. But that was a short over the past few days. You can see it was failing around the 50-day moving average, and really the 65-day exponential was where you were finding resistance on an intraday basis because it was closing below the line each time. And you're kind of starting to see a head and shoulders formation here with an ascending neckline, which, you know, the old rule used to be that, oh, you want to see a flatter descending neckline because that's the weakest pattern. But the reality is, after studying, I guess, hundreds of new examples of head and shoulders, an ascending neckline can work just as well as a descending neckline. And there's no real difference in terms of probability of them working. If you see the pattern, it's weakening, then all that becomes is an uptrend line for the thing to bust through. And the key, again, becomes shorting into the rallies around the moving averages. So Yahoo, you know, the only thing Yahoo had going for it was its ownership of BABA, but that doesn't seem to be working out too well for him as BABA's just continued lower. But I think Yahoo's headed for the 200-day. So the other one I was shorting, Workday, that one's still down this morning. It's probably headed lower. You know what? I shorted some Twitter at about 50.40 something, I think it was. Let me check that. Yeah, around 50.40 on a MACD stretch, and it's starting to come. I would be surprised if that thing comes in if the market rolls. But again, I'm looking at all of these as short-term tactical trades. They can be day trades or swing trades of 2 to 3 days. So the shorts, for the most part, are now third-day trades, and I think you know, you're getting to the point where you take some profits and then see if you can work your way back in on bounces, because we know this market loves to bounce, and you're approaching a zone, I think, on the Nasdaq where you're getting close to a bounce. And I'm not here to split hairs. You're undercutting this low, coming down on top of this low, or this high rather, this range, and you're just undercutting the 50-day. So, but who knows? Maybe the whole thing blows apart. So I got a short out on Twitter now, and it's coming back down into 50. We're below 50 now, 49.98. And just to give you can see, where are you? This is what I just did this. Now here's a run up this morning, and you get a MACD stretch here. You see the MACD lines cruising to the top, right at around 50.40. This sort of tops out, and I think this crossed beforehand. No, it's right about that time, and I pretty much just hit it right there, mostly on the basis of the MACD stretch and the fact that the market looks like poop. So, you know, it's not rocket science. I didn't need to analyze what the Fed may or may not do. Although, you know, I got to think that they're eventually going to end up with QE4. As I said many times, I think they're stuck between a rock and a hard place. You could maybe throw something else really uncomfortable in there as well if you wanted to. But in any case, they're not in any position to be able to raise rates. If they raise rates 1%, they're going to add $180 billion to the deficit, which is already out of control. You know, we're 18 trillion, more than 18 trillion dollars in debt now in the U.S., which on a per capita basis makes Greece look pretty mellow, actually. So, you know, I think we could get a nasty bear market at some point, but I still think that it starts out becoming more a tactical affair, and eventually you develop into a shortable trend that's sustainable on the downside. Somebody's asking about VIP Shop. I don't know, what am I supposed to tell you? That you need to sell it all and it's going down? I don't know, if you have a profit in something, you might consider taking it. But if you don't know what you're doing here, don't ask me. You probably shouldn't even be investing if you don't understand what to do with VIPs. MDM nearing a change? Dr. K? Somebody's asking?
Yeah, we've got, obviously, it's, you know, watching. The thing is, you know, it's a tricky environment because the markets just come off straight down, they jackknife straight down, and then they gain their footing. Obviously, MDM is not going to just sit around if the market really starts to come apart, but it also is very mindful that, you know, the Nasdaq, well, as you said earlier, the Nasdaq is at a place where it could logically bounce. It's on top of support. It's just undercut the 50-day. It seems like potentially a logical place for it to bounce, but you know, again, calling these things to the day is not a good practice, because the markets, as you can see, as everyone can see, they're quite sloppy when you look at the indices. So trying to call something to the day is a bit treacherous. Nevertheless, should selling pressure start to increase, then from where it's at right now, then MDM is most likely going to be switching over to a cash position. And if things really get bad, or rather, if it will observe bounces and will observe how the market reacts, and if it starts to do something different than it has done since December, then the model will act accordingly.
Yeah, and I think I wouldn't place too high of expectations on what the MDM is going to do in this environment, because we can clearly see there's no trend here. And somebody's asking, how about if the MDM trades more like Gil trades? That's kind of ridiculous, because why not just focus on stocks then? Why do I need to try and trade, or why do we need to try and trade the indexes like they're stocks that we're going to flip out in and out of every 2 to 3 days?
Yeah, the indices trade very differently than stocks that you're supposed actionable stocks have cleaner patterns that are where you can actually profit from, and this has been true since QE began. It's just that over the last since the last couple of years at least, tightening up your stops and taking your profits has been the way to profitability in this environment. But to try to do that with indices is foolhardy. To try to short and go long and trade them on a intraday and swing trade basis, that I don't think is a good idea. I think that's could be quite disastrous, because again, these indices will sometimes get into trends, uptrends, and then if you try to still trading it, if you're trying to trade this index like it's been trading since December, and it goes into an uptrend, like it did in, say, May to July of last year, you're asking for a lot of trouble. And then likewise, if you try to trade it on a trending basis, you can also run into trouble because you don't know when the market is actually going to really crack. And in October of last year, the Nasdaq was down about 10%, and it did look like all hell was going to break loose, and yet it didn't. So this is a kind of environment where more profits are going to be made on the stock side. Now, all that said, when the market does finally give it up, the MDM has been able to get in and be very profitable on the downside, and it is patiently awaiting that moment. Who knows when that's going to be? And likewise, if we do get into another uptrend, I mean, that could be motivated by expectations of QE4. And, you saw what QE3 did in 2012. It wasn't a comfortable uptrend by any means, but it was something that the model adjusted to. So if we get a QE4 situation with long, sloppy uptrends, then that could also be profitable. But again, I think, the low-hanging fruit is going to be, I should say the lower-hanging fruit. There is no particular low-hanging fruit, but lower-hanging fruit in this market is going to be in the stocks, short or long.
Yeah, and it's like you can't make the MDM do what it's not designed to do. So we even get some people complaining that the signals are too frequent. So
well, you get some people who want to trade frequently, and then you get some people who want less signals. And the thing is, this environment is looking at models, timing models over the especially since December, it's an extremely, extraordinarily difficult environment. The saving grace is that the market never repeats itself over and over again. So this sideways trend we're seeing, say, in the S&P since December, that's not going to keep going. It's going to, at some point, something's going to give. It's either going to crack to the downside, or we're going to go on some QE4 motivated uptrend. So that's the one thing, that's a saving grace. Markets never continue, they don't stay static. It just doesn't happen. At least it's never happened in the history of markets that I can see.
Looking at some names here that are, again, I have a screen here. I'm going against all securities with a filter, price down, ERG over 150, minimum volume short sale candidates. This is basically leading stocks. If I'm looking for an ERG over 150, that's like a composite rating over 70. I'm going to say 75. So stocks that are been acting reasonably better. It's going to look for them breaking down on heavy volumes. You can see the intraday volume percent change. Stock, this one, Kraft. I think this one is just kind of sitting there. They're merging with the Heinz, I think. You see Skyworks getting plastered. I'll make these a little bigger so people can see them. Lam Research, you see the semis are just getting plastered. Avago getting plastered. We can flip through all these. NXP getting plastered. Taiwan Semi getting plastered. I mean, Union Pacific getting plastered. This would kind of set everybody off yesterday, too, is the fact that the transportation index has been getting slaughtered and worse than the Dow. So even today you're down 0.96 on the transportation index. The Dow is down 0.56. So on a relative basis, the trannies are looking pretty weak, and that's usually considered a forward-looking indicator of the economy. But my argument for a while has been the economy sucks, and the government makes up all the data. It's all just phonied up. GDP is probably a little more accurate. So it shows the slowdown, whereas they like to trump the amazing jobs growth that we have. But we're basically living in Orwellian times. Unicorp, United Bank Corp. A lot of financials getting hit today. You can see most things are down 3 days in a row. So you're getting, to me, a little bit long in the tooth on the short side, and tend to take my profits and kind of back away. And then wait and see what happens. So the trick is always to set up into the upside action. I can tell you what I saw over the weekend is you had a huge gap here. This is color-coded red, though, on Friday, 5 trading days ago, and you had heavy volume, but you closed below where you opened so that it turns red. So it's kind of a gap up and churn type of move, and it looks suspicious to me. Now, meanwhile, the S&P, that's not the S&P. Let me get this going here. The S&P, meanwhile, wasn't making a new high, so it's been kind of lagging. So, in some ways, you can think of the S&P as a broader cross-section of the economy, whereas the Nasdaq mostly tech and biotech. And the biotechs were running everything up last week or earlier in the week, with Biogen on this massive gap up last Friday, which now has all but disappeared in terms of the gains. And you're seeing a whole bunch of other, the Zyop, which had its move. You get a nice move like that, 10 to 14, 40%. In a few weeks, that's something I sell into, and you come back. You got Intrexon was another great name. Remember, we talked about it right here at 30 just before it launched, and that thing takes off and goes up, what was that? What is that, Dr. Like 65% or so? And then, if you got that kind of move, even here, you got to be taking it. And then see if you catch a setup on a volume, dry up here into the 10-day, which you probably could have gotten away with, and it jacks again. And now we're rolling over. You're all the way back to the 50-day. So does this thing bounce? That's the question. So, it's like you saw what was driving the speculative fever in this market. And you're looking at this all across the board. I was just looking at some of these great, wonderful biotechs that everybody's in love with. Celgene looked like it was breaking out last week, and you blow apart, it fails, so it's coming off. Gilead looks like a short to me. It's failing around here. If we look at it on a weekly chart, let's see. Sort of a rolling kind of head and shoulders, so this may be getting ready to bust. It's actually up right now, which doesn't surprise me. Like I said, I think if you're shorting here, you're a little bit late. You could try shorting something up. What I'm doing on Twitter is I'm looking at this. This is IBD says this is a cup with handle, which is true because you did have a 30% prior rally if you're going to get into that kind of definition. And this is a breakout from a cup with handle, so you know how these things work. When everybody sees them and they're all over the front page IBD, that's probably it. Let's see, any more questions? Oh, here we go. VSLR, well, it's coming up. It had a nice run up. That was like 28% from here to here, maybe 20 from the 10-day. I traded it and sold it. It's come back in here. It's sitting on top. If you like it, I guess you could give it a shot, buying it on the pullback. But, all that is predicated on the market not going lower. So, buying anything on this pullback is problematic, and it can be done if you see something pulling into an area of logical support. So, you're right on top of this little structure, this flag here, and you're pulling just under the 10-day volume. Let's check volume. Is running 40% below average right now, so it's a little bit, it's kind of light, so it's hanging there. Now I would say be cognizant of everything on the short and the long side at all times in this market, because it's a swing trader's market. It's not a market for investors. And if you're going to make money, you're swing trading a lot of stuff, which means you kind of have to have your nose in it, or at least if you have a real job, you're trying to swing trade things maybe for 15, 20% gains if you can get them. Sometimes you don't even get that much, depending on the name. But let's see. Somebody asking about loans. I think I'll get to that, exactly what I would be doing here. Cyber is retesting the 50-day, so maybe that's one to look at. I got my eye on that. It's up a whopping 11 cents right now, but it's hanging in there around 50.25. So that's one possibly to look at. But here's the basic process here. Some people ask, let's go, whoops. You can see my here we go. Let's see. So I basically on HS Investor, I'll go to my buy watch list. So user groups here is gives me buy here, and remove the filter. So there's no filter. It's pretty simple, and this shows me my list. And what I can look at here, give it a second to kind of update. Here we go. We can look at what's hanging up. I mean, we can see, Ulta Salon's coming off on heavy volume today. But if we go down here, let's flip it the other way. We can see what's pulling back on light volume. And this is how I look for pullbacks on light volume. You know, people ask me to have HGS Investor put up a voodoo screen, a volume drive screen, and I'm thinking, you know, you guys are lazy. Just use a little common sense and figure out what you're looking for. What I look for on voodoo pullbacks, I want to see on my buy watch list candidates. Okay, so long ideas as they're pulling back, and they are ideas. I'm not just screening the whole market for them. I'm looking at this based on a list of stocks that I already have set up. So all I have to do is pull up my buy list here and sort them by intraday volume percentage change. And just so you know, I have this set up so it's constantly updating in real time. And you'll get your first reading 15 minutes after the open, which is faster than MarketSmith, which won't give you anything for 20 minutes, because I know on Wanda sometimes it's 20, 25 minutes before you can get a screen going that shows you the volume levels. You can look at your buy watch list, but you won't see the volume levels show up for a little while. Anyways, looking at this, Zio is kind of an interesting name. You see it's an IPO over here. Kind of a double bottom sort of shakeout. And I don't know if this is going to hold, but pulling back very light volume. Zelteek coming down on light volume, undercutting this low. There's nothing really happening there. Ziofarm on light volume down to the 50-day moving average. Let me check the volume level there. See, I hope that's coming in okay. Catalent pulling into the 20-day. Second Sight, nothing really going on there. Spirit Arrow, nothing going on there. Volume is light here, but I don't see them pulling into areas of support. So here's Chegg. That thing's coming off, but it's a smaller stock. It's going to if the market does. Vivint Solar coming in at 35% below average now. Tessera Technologies, that's a semiconductor name getting smashed down to the 50-day. Volume is light. Paycom down to this. You see a lot of these coming down in the 50-day, but I think the volume levels could change, so there really isn't anything that I like here that looks good. Let's see what's up today. Verint's up. Cambrix is trying to rally. Twitter is trying to rally. But I'm short that thing, so I'm actually looking for things that possibly get worse and this thing rolls in. Basco Data, this is the one I talked about last week. It's trying to round out a base, but nothing really happening here. Infinera pulling down. This has gone really nowhere after this gap up here, so there's nothing really going on there. So these are things acting relatively better. VSLR is trying to hold up. And you can see there's really nothing happening here on the long side. So, you know, this is how I look for longs to buy into on a pullback, and I watch them in real time. So I don't have any list of stocks that I'm looking at ahead of time other than my original buy watch list. Okay, and I'm watching it on here and looking for names as they're coming down on light volume, and I'm not really seeing anything right now. And I'll look at this throughout the day. And yeah, anybody who has this software has this same capability, and it's not rocket science. It's not hard. A little bit of elbow grease in that you have to go through the list and actually look at it. Nobody's going to hand you buy this, buy that, short this, short that on a silver platter. You got to kind of work it out. But there it is. It's in your face, and it's not that hard to figure out. If you have another list you want to look at, like, for example, let's look at let's see, I don't think I'm... So if I want to look at IPOs, popular stock categories, these are IPOs, so let's look at if there's anything exciting. I'd use a filter here though, an IPO filter. And look, nothing coming out. Tube Mogul, what's going on there? It's trying to turn. A lot of weird colors, but nothing really happening there. So, net, I don't see anything that I have to do here. You just kind of hang out and wait. But that's how I do it. It's not really rocket science, and it's not. Oops, what's going on here? Oh, the website, I guess, throwing an ad at me. Let's see. Market trying to rally. How about GoPro? I'm not sure what's going on. Oh, I got the wrong list here. Sort of trying to round it out here. You see it's going code blue a little bit here. This is kind of a pocket pivot type move yesterday off of the 20-day. It's stalling a little bit, but I think that's kind of interesting. As a potential turnaround situation. I also like Loco in that regard, which is pulling back a little bit here. I've kind of got my eye on it this morning. Let's go through some more questions. Please encourage HCSI to provide real-time data. Well, it's a 15-minute delay, and it costs money to get real-time data because then you're having to pay the exchanges, okay? So, and then you have to verify to the exchanges that the people using your software are or aren't professionals. So that has to be built into the price. So, that's not going to happen. If you understand anything about how real-time data is provided, then you should know that. So they're doing it as currently as they can, and that's really all you need. You don't necessarily need real-time data. If you want to, what you can do is go through the list here, and then go through the stocks that are moving up. So you can check them out this way, and you get a real-time chart here. So that's one way to do it. Warden provides real-time for $10 a month. So you should get Warden, and I would check on that because you're probably just getting BATS data. LCI bouncing from the top of its cup at 60 could potentially have a pocket pivot today. I don't think so. It's got to be more volume than that than you saw yesterday. How could you have a pocket pivot? You're coming off of a hard decline. You bounce off the 10-week more or less, almost, but not quite. And I don't know how that's going to work. So if you traded, so I don't understand what you're saying here. You're not bouncing off the 50-day. You're not above the 20-day, and you're not above the 10-day. So somebody asked, what does your IPO filter look like? I'm just looking for certain volume levels and price levels. I don't like $2 IPOs, so it's got to be over $8 and trade at least 250,000 shares a day. Nothing really complicated. So, I mean, if somebody likes Warden, go ahead and use Warden, but I think it's just charts, so I like the fact that you have much more screening capability here. But I haven't used Warden for a long time. I used to use it back when it was Telechart 2000, way back when I was a broker. And those are my real-time charts, which I updated at the end of the day. Anyways, everybody loves HCSI, at least from what I can tell. Somebody says, well, was that an old Camaro on your desktop? No, that was actually a Barracuda, like a 72 Barracuda funny car from the 70s, a drag racing vehicle, and for those of you who've seen that before, that's basically my wallpaper on my computer, and that is Big John Masmanian's candy apple red Plymouth Barracuda funny car, which is my favorite car at the time. And some of you might remember the story I told about going to the drag races with my friend down the street a few Sundays ago, I think, when I did a stock hunting webinar, if any of you remember that. But we lost to Big John Masmanian in the finals of the meet I was talking about. Anyways, don't have time for that. Now let's go through some more stuff. You know, Baidu was another great short. Rallies up in. You can see the it's kind of a rolling head and shoulders. You rally right into the 40-week line, and which takes you just above the 200-day line here, but right up into these peaks of this range here. And so, you know, you could have surmised that that was shortable at that point, and then gapped down and broke apart and heading for the lows. But again, you're down, so you might rally back up. You could retrace half of this up to the 20-day. It's sort of in flux right now. But the thing is, you get a break like that, and I'll cover into that. So Tesla's another one that keeps giving short sellers gifts by rallying into the 50-day over the last couple of weeks. Same thing yesterday. This stock is going lower, okay? I don't see anything. You stall a little bit at the 10-week line here last week on the weekly chart here. You're rolling on a head and shoulders. I don't see this thing going anywhere but down from here. Down, 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 like a rock lobster. Let's see. I did talk about workday, so you know, stalls out here. It's not unusual. The thing slides past. The market was strong that day, I think, and it's sliding past the 50-day. So you're watching. You see it stall. The next day, you come after it, and it breaks. Or you could have been shorting into this move. You can see sort of a fractal head and shoulders in here. If we look at Splunk's another one, here's a little fractal head and shoulders here, and you can see you broke the neckline the last couple of days. Now you're undercutting this low here, so you're trying to rally. You're probably coming off the 40-week. Yep, there you are. So you're probably going to try and bounce. I'd use a 50-day line as a place to short the stock. What else? Data. Data is trying to hold the top of the breakout here. So here's this big cup with handle. Whoop, here we go. On the weekly chart, there's the top of the handle here. And you can see you're pulled back right into that. You're trying to rally back up through the 50-day. So this could actually become a short sale point as it's coming up into the 50-day on the premise that this thing is going to blow apart. And it wouldn't surprise me if it did, especially if the market comes apart. I think something like this is extremely vulnerable. So, I mean, it's anything that's high PE. I think if the market starts to come in, you see everything that's a high PE stock get hit. And then everything that's economically sensitive, like the semiconductors, just getting destroyed. I know GoPro's trying to rally here. Twitter's rallying too, so may get stopped out on it, but not really worried about it right now. Minus 47.82 on the Dow, so it's trying to bounce. So see, things become a little bit obvious today, and if you're trying to short today, you're kind of late to the party. You definitely have to anticipate. But again, this market requires something of a bifurcated approach. You know, I find myself flipping long and short quite a bit, not making a lot of huge progress, and I think that's going to be true for any environment where you're seeing a lot of volatility. And I would say this year is much different than last year. It seems to be a little bit more volatile to start out the year, and I think that's evident in the charts as well. You know, last year, let's see if I can. The Nasdaq, you had some better trends, you know, to the upside that you could play. Like this was a good uptrend early in the year, and that was playable. And then you had a nice correction, that was playable, and then a nice uptrend here, a nice break going into the end of the year, followed by a nice uptrend. But again, you're catching things as they're turning, and you are going after the bottom fishing pocket pivots and the roundabout pocket pivots. Now this year it's been a little crazier, but you did get a good trend here, but it's still very specific to certain names and not necessarily the type of environment that gives you the kind of thrust that we saw last year. So Somebody says, if you ever feel moved to show us how to program and use HTSI, what makes you think I'm an expert at it? I just use what I use, so, and I figured out it's not that complicated, so that ain't going to happen. The last thing I'm going to become is HTSI's customer service or training group. Someone says, audio buzzed and disappeared. That's probably your internet. Let's see. F5, that's another one. Here you see a fractal head and shoulders rallied up into the 50-day. There were so many of these earlier in the week that were setting up. It just looked, to me it looked like just too juicy on the short side. And you had a couple of things working on the long side, but mostly you could see that a lot of these patterns that I've been watching on my short sale watch list were all getting into places where they could be considered shorts. Here's CMG, so that, again, this is sort of a fractal head and shoulders. It's made another right shoulder, getting above the 50-day moving average and rolling over hard down to the 200-day. So that was a nice short over the last 3 days if you were on top of it. And again, you have to have a bifurcated approach. You can't look at the indexes, and I wouldn't even worry about what the Fed's doing. I mean, to me, that's only just so much mental masturbation. And if you're into that, great. But all you have to do is watch what stocks are doing. Don't have any preconceived notions. Just look at the setups on a stock-by-stock basis, long or short. That's all you need to do. And then trade them on a swing trading basis and gauge the moves that you're likely to get. Keep tight stops. You know, that's how you work it. So it's not it's not a typical environment, and I don't think that the backdrop, however you can analyze it, is going to really give you any sensible conclusions, because it's crazy. You're in a bubble environment. What the Fed has done is unprecedented, and they're sitting there now and they're befuddled. They don't know what to do, really. Janet Yellen doesn't know what to do, so they're just going to keep things the way they are, because you haven't seen disaster yet keeping interest rates near zero, and they're afraid that if they start doing anything too aggressively in terms of raising rates, and that might tip the boat, and they don't know exactly, you know, how hard they'll tip things, and so they don't know what they're doing. And I know they get up there. Dr. Hay, would you agree that they have no real clue what they're doing?
Say that again, right when you
Do you
said
think
that.
the Fed really knows what they're doing, that they have a certain expertise in the way that they implement their policies?
I mean, this is true with central banks all over the world. They're politicians first, and they do what the government wants. And they create the fictitious picture for the masses that you know, whoever's in power continues to be favored. You know, that's just a standard protocol amongst all these governments around the world. So,
Yeah.
you know, for anyone to think Yellen has some sort of economic expertise and knows how to guide the U.S. to safety is a foolhardy notion.
Yeah, and so you know you're in this crazy environment where there's a lot of risk, there's a lot of uncertainty, you're in uncharted territory, and I think the only way really to operate is on a short-term basis, because if you stick your neck too far out, you're liable to get whacked. And you look at some of these names, you know, I look at this one, and you know, you're all happy and you've got all these great gains over the last 2 or 3 weeks or for the month, and they're gone in a day. You know, you buy you think this is a buyable gap up, and I would argue that it's not. It's 1, 2, 3, third one up, kind of, you know, 3 and out here, and boom, you get whacked. Even something like Sonic, which you would think is pretty benign as a fast food, sort of like 50s Redux or whatever sort of place where they come out on roller skates, I guess. And I think I ate at one in Franklin, Tennessee. Wasn't too bad, actually. I've had worse. But I mean, look at this. This thing is rocketing, and the volume's up, and this looks strong and powerful, and then slam. Why? Because money just decided it's coming out of there, and that's what you're dealing with. I think things are sloshing back and forth, and maybe faster and faster. And you can manufacture a rally like this maybe on the strength of big biotechs running, Apple running higher. Apple's actually up 70 cents right now, 65 cents as I speak. So it's Sonic was also, yeah, it was on the cover of IBD. And what happens these days is when there's a breakout, there's so few of them that IBD plasters them all over the cover of their newspaper, and then they become really obvious, and kaboom, they become the gooey kablooey from there. And so it's just a very difficult environment. and I'm not making huge progress this year. It's possible to make a little bit, but it's tough, and I think that's just part of what's going on here. So if you can hang in there, I think at some point it's going to be possible to make big money, and that may just turn out to be on the downside. We may get a big bear market that's just going to be a beautiful affair on the short side, and it doesn't have to happen today. So, and yeah, I agree. Somebody says volatility is here to stay. It's volatility because the whole thing is just a big algo pong session. And you've got all this money sloshing around and all these algos slamming things back and forth. So does anybody, I'm sure some of you guys are pretty knowledgeable out there, can anybody give me a number on what the percentage of trading today is being done by computers? I know there's some of you have to know, or at least have a good idea. I last read something like 90%, but I think that was in Michael Lewis's book, what was that, Flash Boys or something, I forget. 70% or so. Yeah, so you're a lot of time you're trading against machines, and I think that's something that needs to stop. And the HFTs, these high frequency trading funds, they need to disappear, and that needs to be outlawed because essentially that's electronic front running. So there's so many imbalances that I'm hoping that it all leads to just a beautiful bear market. So. And that said, keep an open mind. Don't get hung up on all that, and you can get depressed about it. But I think you still hang in there, and there's going to be some opportunities. Amberell, trying to hold the 20-day here. I'm just kind of flipping through some of these things. VSLR has turned red. I don't know about this name. I think it had its move for now, and with the market being the way it is, this one's starting to break down. GoGo. There was news the other day that the chief accounting officer, which I guess is like a proxy for the CFO or something, resigned from the company for personal reasons. That spooked everybody. But I think the real reason is that Lufthansa flight that crashed, was that they crashed into the Alps in Germany or something, or in Switzerland, Dr. K? Do you know what was that?
I don't really pay attention to news like that.
Well, there was a plane crash.
I know there was talk about it, and they were saying something about the co-pilot intentionally crashed the plane, but I caught that very briefly, just when I go through my news feeds.
Right.
But I don't.
Right. I saw that, and the first thing that flashed in my mind is, okay, the pilot left the cockpit and went down to the back of the plane, and the co-pilot locked the door, and he wouldn't let the captain or the pilot back in. Now, all I want to know is, did that plane have go-go internet? And if so, maybe the co-pilot was getting on an illicit website and wanted a little privacy. I don't know, but that sort of hit my mind when I heard that the door was locked. And maybe that's what's knocking go-go down. So it's going to become a big problem with co-pilots accessing porn on the internet. So anyways, it is undercutting this low. So maybe that sets up a buy point. So somebody says his breathing remained normal, so probably not porn. Don't laugh at the porn industry. I think it was the first industry that figured out how to make money on the internet. So viva la entrepreneurism, I guess, however that goes. Anyways, getting distracted here. HTTP, this Hadoop, which is this new open source. Do you like Hadoop, Dr. K? Do you like the whole concept of Hadoop? You got to know
HTTP is it's not proven. It's a thin stock. It's not proven itself.
No, I'm talking about the technology of Hadoop. You know what Hadoop is?
Well, doesn't it do the it's the Netherlands company, and it's it's doing like all the big data massaging.
Yeah, it's an open source platform for managing big data, I guess. And there's a bunch of IPOs coming out, and this one is another one of them.
Another company does that as well.
Yeah,
it's like the Google of enterprise for businesses.
Yeah.
So it's a hot story because certainly businesses can benefit from things like this, but. And I think there are new companies that are getting on board, but that other company hasn't proven out price-wise, and then this one certainly hasn't yet.
There's some hype right now because of some IPOs coming out in this Hadoop area. These guys do Hadoop, and it's a big ugly double bottom, and this could be seen as a shakeout plus 3. So, I'm not really too worried about what kind of a stock this is or what the technology necessarily. If the technicals are showing me something, then I'll play it. But I am watching this stock right now. Shake Shack. For those of you following me on Twitter, I think I called this one on a pullback into the 10-day line the other day and had a nice jack, but that was real quick. Look at Jose Cuervo. Fantastic run. Look at that move, breaking out from a little cup with handle. It's probably all over IBD right around here, and it runs up and then slam all the way back in. So and that's pretty hectic move to the downside. 3 days, just boom, goodbye. Let's see. Palo Alto Networks is just building another base, bouncing off the 50-day. So you can see a number of names trying to get support at logical areas, but not really happening. LinkedIn, down to the 50-day. It's definitely just under the 10-week line over here, but there's a pullback. And some of these are in pullback land. Maybe they get a bounce and you can trade it. But in terms of investments, I don't know. You notice GoPro rallying? It's up $1.55, 43.84. I don't know if that's the high for the day. Pretty close. I think everybody's still short it. Cyber is also rallying. It's up 99 cents, coming up off the 50-day. And that's got about a quarter of the float short as of the last reported date, which I think was mid-month, just a few days ago. And it's trying to hang in there. But you can see the base still needs some work. INFN, I already talked about INFN. It's going nowhere. It's trying to turn. But it's kind of a slow mover, trying to turn. Maybe, I don't know, if you bought it off the lows, then you're doing okay. But you notice here it also bounced off the 10-week on the weekly chart, so that nothing too surprising there. JD's one that I've looked at, and it's pretty sloppy, but you did get a sort of a pocket pivot here. It's trying to round out. Notice how it's trying to form a big cup. It's kind of a double bottom here, and trying to round out and come up. So you might consider that like a cup with handle breakout. It's only a 1-week handle, but you did have that on a pocket pivot. It's coming in a little bit. But I think things are sketchy. I think you might see the market looking like it's trying to rally back this morning. You'll see a few stocks bounce, but then I think they may take it lower, just a little bit lower, to panic everybody and then create some sort of a bounce. So MNK, Melon Crop, that's probably getting hammered right now. It's holding the 20-day, so that's holding up. I hope you're just mentioning that as something that's holding up and pulling back, and not requiring that somebody tell you what to do with it. Any other ideas? Looking down my list here. GMCR, I think we've talked about this one before. You can see it's finally breaking down. It took a while, though. Chopping its way lower, and then finally it just rolls over off the 50-day the other day. And you can see how most of these things, they break with the market. And they were starting to break. Some of them were starting to show faltering action on Tuesday, which is what got me very suspicious. And that's when I started getting heavier on the short side. Housing names holding up. RH, I noticed I had a pocket pivot. It's trying to round out. Here's a pocket pivot off the 10-day. It's trying to round out a new base, but it's pretty choppy on an intraday basis. Very choppy stock. This is what it looks like on a weekly chart. So, it's holding up. You had a pocket pivot here. Maybe it turns if the market turns, if you get a bottom. But I think most of you have, you know your buy list. You know what that is, and you just kind of watch and see what's happening in terms of potential buy opportunities on a pullback. So it's just it's sort of nebulous, and I think that you are seeing some signs that here Nasdaq now bouncing, undercutting now, and bouncing off the 50-day. So like I said, not it wasn't rocket science. You can kind of surmise what's happening. The other thing is a lot of people want to start getting short now, and I think you have to anticipate, just like you have to anticipate the turn and the stocks pulling into viable areas on light volume. So can you let us know when the market is investable again? In the meantime, I'm going dirt bike riding. Here's the thing you can never know for sure. And I like to tell the story. In fact, I wrote about it in the first book that we wrote in the where I went through some of the notes in my trading diary from back when I worked with Bill O'Neill. On October 23rd, 1999, I was up 36% for the year at that point. And Bill O'Neill said that this market is through, and put a fork in it, it's done, it's going lower, that's the end of the story, blah blah blah, with a great deal of conviction. And then 5 days later, or 4 days later, on October 27th, we had a follow-through day, and I went from being up 36% to being up just over 1,000% over the next two months and 1 week. Okay, so the idea that you can tell when a market becomes investable again is not really valid, and you got to be watching and paying attention all the time. And with the internet, I think you're able to do that even if you're out dirt bike riding. What I would do is have some sort of an iPad screen installed on the handlebars of your dirt bike, and then somehow hook up some sort of MiFi mobile wireless internet device in your motorcycle somewhere, and maybe you could have it powered by the battery, put in some sort of transformer or something that allows you to hook up to your engine so you keep it powered, and then you'd be able to go bike riding and watch the market. So I'll tell you, if I go golfing on a market day, which happens on occasion, I will bring my iPad, and I have a MiFi unit that gives me, it's basically a Wi-Fi hotspot that's mobile, it's Verizon. And I can watch the market on my iPad with eSignal has nice quotes on there, and I can trade if I need to. But if things are kind of quiet and I feel like taking a day off, I still will do that, and that's possible because of technology. And I think it's necessary because things can change quickly in the markets, and you want to be on top of it. So, anyways, a heads-up display on your helmet. MXDG. Did I say that right? MDXG, sorry. Yeah, I saw this. This is all over IBD2. It was a breakout here. And, of course, it breaks yesterday, comes right back in. It's holding the 10-day line. That looks, I thought it looked interesting. I don't know much about the company. Do you like this structure? Is there anything you can surmise on this real quickly before we sign off?
Yeah, before we sign off, it's a medical product. It does these biomaterial products, and I mean the thing is, I haven't really looked into it very in depth yet because it doesn't excite me right now. I mean, it had a gap down in its pattern at the beginning of the year, and that to me means I'm really not going to be interested in going long a stock that's just had a gap down in its pattern on huge volume. Last earnings report did well though, so it could redeem itself, but I prefer to wait a little bit longer before I try my hand at something that has gapped down within the last 3 months.
Yeah, probably maybe some news. A couple of things that I would point out is if you look at the estimates for this guy, 19 cents is what they're looking for this year, so it's going to become profitable. They're doing a nickel. They did a nickel in 2014, and that's would be 280% growth. And then, of course, in 2016, they're going to supposedly do 28 cents, up 47%. They make what they call allografts, I guess, processed from human amniotic tissue.
Yeah, they're doing tissue repair.
Integumental tissue repair. Wow, that sounds... I'm in. I'm buying this. I'm all over it. Oh, wait. Market looks like trash here. Coming down 76. Go ahead.
The weekly on this chart looks pretty treacherous. It's a cheap stock.
Yeah.
Thin stock. In this kind of market environment, I'd rather, steer clear of names like this because when the market tail spins out, these names get hit a lot harder, typically.
Yeah.
So let the buyer be fun. I like the name. It's an interesting thing, but it's not really interesting me enough to take any action probably for quite a while.
Okay, there you have it. So, I mean, that's all there is. I don't think there's a lot to do here. If you're watching your buy watch list, on the pullbacks, watch for volume dry-ups as they come into logical areas of resistance. In some cases, you might try buying some things because you are getting into an area where we see the Nasdaq coming down to the 50-day, so you are in position for a bounce. And it may be tradable. So I think that's really what you're doing. And I can't really identify anything right now. I like the GoPro. I mean, but that's a bottom fishing expedition there, and I also like the cyber here on this pullback. I think Loco looks interesting on the pullback. Some of the solars, First Solar, maybe on this pullback to the 20-day becomes viable. SunPower, you know, maybe on this pullback is coming down into here. But it's a little of this, a little of that, a whole lot of nothing. So I'm not really sure this is the type of environment to really do much and hang loose and just kind of see how it plays out. If you want to be a nimble trader, then I think, like I said, you watch some of these things as they're pulling back, and maybe you take shots at logical areas of support if the volume is drawing up, either on, if you can see it's drawing up on the daily chart or on an intraday basis, using whatever you use to do that. Then I think maybe you can take a shot. So, but we'll see. It doesn't really look good. Any final words, Dr. K?
No, that's it. I'm good. I got to actually get going.
All right. We'll see you guys next week. And if the spirit moves me, and I think I see more short sale setups that might become actionable over the weekend, I may do a stock hunting webinar over the weekend. So stay tuned for that. And we'll catch you guys later. Take care.